Now, our next guest is Buzz Heidtke. This is the principal portfolio manager for the MidSouth Fund. This is a longtime friend of RedChip, and he specializes in smaller cap companies.
Now, Buzz, you have a long, successful history of investing in smaller cap companies. Can you tell us what are some of the things you look for when you're picking stocks?
Okay, I play probabilities without a computer, and I kind of know what works and what doesn't work, John. I specialize because in microcap stocks, the reason I do, there's a lot of academic studies, some going back as far as 1927, showing microcap stocks on a size group outperform any other group. Then I'm in value stocks, and in value stocks, most academic studies show they outperform growth stocks. So my idea was to combine the two, and if I did, I could outperform the market. When I'm looking for a microcap stock, I look maybe one of 4 or 5 different characteristics. If they're selling for below book value, that meets my screen, or if they're under 25% of sales per share, under 5 times cash flow, 5 times cash flow, under 25% of sales per share, I'll take a look at them. And then in addition to that, I would prefer the revenues be up 10% and the earnings be up 20%. And I get a lot of stocks. But in addition to that, if I can find a catalyst, then that is very difficult to find a catalyst. But there's some academic studies that show that 70 to 90% of a move in a stock is because of some catalyst or something going on right now would cause that stock to go up.
Now, what pitfalls should investors be cautious of when they're investing in a microcap stock?
Well, one is story stocks, and story stock is quite often a company that has no earnings and no balance sheet to speak of, got a nice story, and if you bought 100 of these, you'll underperform. And people will call you up, hucksters where you'll hear a tip on them, and they got a cure for cancer or whatever it may be. But you'll normally lose on these, even if quite often if they did okay, the huckster is going to get the money, or if they did, the company's going to need more money, and it's very rare you ever make any money selling those. Also, a lot of them are very illiquid, and you should never buy one without putting a limit order in. And the market makers are kind of sharp too, so put your limit order, be patient. If it goes up a little bit before you get your position, just lay low and buy a little bit, and then add to your position is what I normally do. I might be in an event like the earnings are good the next quarter, so I'll go buy some more of it.
Gotcha. Well, Buzz, it's been a pleasure talking to you. Thanks so much for visiting us today.
Thank you, John.
Buzz, you're still the best. We appreciate your sharing your wisdom with us today.